Hey Samsung, this is Shreya from Samaya, and now we'll move on with 16th case scenario here. A lot to read there. Without that, we'll move on to the first question. Section 139 prescribes that before appointment of an auditor, certificate is to obtain from the auditor that appointment, if made, shall be in accordance with certain conditions. Yes, like internals and disqualifications under 164 and any as per act and all. Which of those following is not in condition with such a listed public company? Okay. An individual or firm, as case may be, is eligible for appointment, is not disqualified for appointment under the Act and Chartered Accountants Act and rules and regulation. Yes, not disqualified is a certificate we have to give. Option A is right, and we'll see option B. The proposed appointment is as per terms and term provided by the Act. This is also a condition. What they have asked that not a condition, right? A and B were those conditions. The proposed appointment is within the limits of the laid down by the authority of the Act. Even for tax audit, there were certain limits. Statutory audit, there were certain limits. So that's also true. The proposed appointment, as per regulations of SEBI, being it a listed entity, there need not be taken approval from the SEBI for the appointment. So option D is the not the condition, so it's the appropriate answer. D is appropriate answer, and the provisions of rotation of auditors is not applicable to certain class of company. Which of the following is not correct option? Okay, they're asking which is not true. All unlisted public companies having paid up share capital up to a certain limit. Yes, not applicable. We'll see what the certain limit were. Like 10 CR. If it touches 10 CR, they have to, rotation of the auditors is applicable. And even the private limited companies, if paid up share capital touches 50 CR, rotation of auditors is applicable. And for listed entities, it's obviously applicable. And all the other companies having paid up share capital below the threshold limit, but having public borrowings, when it touches public borrowing touches 50 CR, then rotation is applicable. Or private and companies up to a certain limit, and all unlimited public company having paid up share capital and reserves. No, only paid up share capital, not with regards to reserves. So option C is not the applicable condition. So option C is most appropriate answer. In case of a government company, statutory auditor is appointed by C&AG. Yes, C&AG. Not in with consultation with central government, because central government only owns the government company. Because central government owns that company, it is known as government company. So it has to be appointed by an independent party. That's only C&AG. Option C. Which of the following is incorrect? Okay, again with regards to audit committee. Audit committee can make recommendation regarding appointment and terms of appointment auditor, yes. And the audit committee cannot make recommendations regarding remuneration of auditors. No, they can make recommendation and they were fixed by the board of directors. And this B is incorrect. We'll see the other. Audit committee can review and monitor auditors' independence and performance. Yes, they can review and monitor that. And they could also monitor the effectiveness of audit process. So option B is incorrect, which is appropriate answer. Fifth one, which of the following is correct with regards to audit committee? You see all the above were incorrect options, and now this have been a correct option we have to see. Audit committees to be constituted by every public company. No, every listed company, but not every public company. There were few all segregations, like if it touches 10 CR of paid up share capital, all the public company, audit committee is applicable. When a public company having turnover touching 100 CR, audit committee is applicable. And borrowings were more than 50 CR. There was not that all public companies, it is all listed entities, audit committee is applicable. So option A is wrong. Audit committees to be constituted by every public company and private company having paid up share capital and reserves. No, only paid up share capital. Option B is also not right. Audit committees to be constituted by every listed entity. Yes, option C is most appropriate answer. And now we'll move on to case scenario 17. First question. As there is a change in share capital of Star Limited, that is, the company had changed the share capital. Which of the following combination related to the forms to be submitted not correct? Okay. Form SH7 to be filed with MCAS. They have to file for such changes in the share capital. Form CRA2 to be filed with Ministry of Corporate Affairs. No, CRA2 is like it has to be submitted when you appoint a cost auditor. So this is not correct. So option B is most appropriate answer. Securities premium can be used for except one of these. Okay, we know for what all the uses of the securities premium. This is often repeated in the MCQs in respect of preliminary expenses. Yes, with regards to issue of unissued shares to the members as a fully paid bonus shares. Yes, the purchase of its own shares, that is buyback of shares, and to be used as working capital? No. Securities premium account balance cannot be used as a working capital balance. Revenue reserve can be used. So option D is most appropriate answer. With regard to the issue of sweat equity shares, which is not correct. The issue is authorized by ordinary resolution. No, it is issued. The issue is authorized by a special resolution. So option A is incorrect, and which is the appropriate answer. Which of the following is not correct? Okay, section 52, securities premium account right. Section 53, issue of shares at discount. Section 54, it is issue of sweat equity shares, not bonus shares. Section 63 is issue of bonus shares. So option C is a most appropriate answer, which is not right. And fifth one is with respect to which of the following passing a special resolution is required? Okay. Issue of sweat equity shares as special resolution, reduction of share capital, special resolution. So option C, both A and B is most appropriate answer. And now we'll move on to 18th case scenario. First question. AMR Associate shall hold office as auditor for Venus Limited. How many? We'll see whether they're first auditors or not. AMR Associates are appointed as first auditors. Okay, first auditors till conclusion of annual general meeting. So option B is most appropriate answer. What are relevant provisions related to audit committee section 177? The section number for the audit committee with regards to provisions of audit committee. What is the maximum number of audits remaining in the name of AMR Associate? Okay. How many partners they have? 1, 2, 3. 3 partners. How many stats audit they could appointed as? Each 20. So in total for the associates, 60. And what they, how much they already have? 60 minus 10, 50, and minus 15, that is 35. 35 minus 20, 15. So remaining 15 audits they could sign the audits. So 15. Option D is most appropriate answer. In case of a private company under section 143(1), that is, auditor has no duty to report on internal financial controls. That is exemption from ICFR reporting. And with regards to the turnover and aggregate borrowings, what are the limits they were asking about? You see, exemption from ICFR to a private company when it is a startup or OPC or having turnover less than 50 CR. As soon as it touches 50 CR, ICFR is applicable. Borrowing also 25 CR, less than 25 CR need not. So option A is most appropriate answer. Fifth one is, had Venus Limited been a government company? For government company, first auditors have to be appointed by CNDG. Yeah, CNDG within 60 days. Option B is most appropriate answer. And now we'll move on with 19th case scenario here. We'll see first question. Dash is the summary of significant matters identified during the audit and the way they were addressed. You see, this is definition of what? Completion memorandum. We have discussed this completion memorandum quite a lot of times. So option C, completion memorandum is the summary of significant matters identified during the audit and how they were addressed for the future reference. And B is, and sorry, option second question is the suspectability of an assertion to a misstatement, that it could be material before consideration of any related controls, is that is before considering any kind of the internal controls in which that assertion is related to, there's a suspectability that misstatement could be material. This is what? This is inherent risk. Option B is most appropriate answer. This is what the definition of inherent risk also. Option B there. And first one, audit procedures consist risk assessment procedures and other procedures. Yes, all the planned risk assessment procedures and further audit procedures. And substantive procedure consists of tests of details and analytical procedure. Yes, this was also we have discussed earlier. So both these were right. Option C is most appropriate answer. Both were right. And fourth one is dash refers to the audit procedures performed to obtain an understanding of entity and its environment. You see, SA 315, it's looking like SA 315, whether due to fraud or error of financial statement assertion level. In SA 315, what do? We do risk assessment process. So option B is most appropriate answer. Fifth one is statement 1, substantive procedures alone can provide sufficient and appropriate audit evidence at assertion level. No, they cannot provide sufficient and appropriate audit evidence at assertion level. Only tests of details provide that. Substantive procedures were mostly like financial statement level, all the ratios and all. So not at assertion level. Tests of controls do provide that at assertion level. So statement 1 is wrong. Test of control is audit procedure designed to evaluate the operating effectiveness of controls in preventing, detection, and correcting misstatement at assertion level. Yes, test of control. That's true. controls related to that assertion level could be evaluated. So option 2 is right. Yes, statement true. Option B is most appropriate answer. And now we'll see 20th case scenario here. First question. Statement 1. Although written representation provide necessary audit evidence, they do not provide sufficient and appropriate audit evidence on their own about the matters which they deal with. Yes, they are just a corroborative evidence. These were not qualified as a sufficient and appropriate audit evidence. The statement 1 holds true. And second statement is written representations do not include financial statement assertions supporting books on records. Yes, written representation are just management representations to the auditor with regards to such particular class of transaction or account balance or assertion. So statement 2 is also right. Both the statements were true. So both were true, right? So option C is most appropriate answer. Second question is, auditor can perform the following procedure to identify litigation claims. Okay. Inquire management, including in-house counsel. Yes. How could he obtain sufficient and appropriate audit evidence? Through inquiring and reviewing the legal expenditure account, reviewing the minutes of the meetings of TCWG and the entity, and external legal counsel. All were right, right? Option D is most appropriate answer. And third question is, negative confirmation requests require the third party to respond in following cases. Negative confirmation is to respond the third party when they disagree. That is what disagreement. If there is a disagreement, option B is most appropriate answer. When it's a positive confirmation, both as agreement as well as disagreement. And fourth one is statement 1, a failure in confirming party to respond or fully respond to a positive confirmation request or any confirmation is a non-response. Failure to respond is a non-response. Yes. Statement 2, a response that indicates a difference between information requested and the entity's records or etc. provided by confirming party is an exception. That is a deviation. Yes. Even statement 2 is also right. The difference is the exception. So both the statements were true. So option C is the most appropriate answer. And fifth one is, which of the following is incorrect? So for as to related party transactions, many related party transactions are in normal course of business. We'll hold this a bit, or we'll come to it later. And related party may not be conducted under normal market terms or conditions. Yes, this is what the high risk they are talking about. It may be not at arm's length price, but at close length price. In some circumstances, related party transaction may give rise to higher risk of material misstatements. True. You see, since the context was like related party transactions may be at a close length price, so many of the related party transactions were in the normal course of business. So this is also right. Only few transactions, not all related party transactions were at close length price, right? If we have had that risk that the related party transaction could be at a close length price. So I think option D is most appropriate. We'll see the answer here. Okay, they have gone with option D, none of the above. So all the three were right. They have even thought this was many related parties transactions were at normal course of business. So option D is most appropriate answer. And now we'll move on to 21st case scenario. First question, dash are manual controls that make use of some form of data or information produced from the IT systems and applications. Okay, this is definition of what? This is definition of IT dependent controls. We'll see that definition. They are manual controls which make use of data info report from IT systems and applications. So option B is most appropriate answer. And second question is statement 1, application control includes both manual and automated controls that operate at business process level, and general IT controls apply to mainframe, miniframe as well as end user environment. First, with regards to application, both include both automated and manual control operate at business process level. Yes, that's true. And second thing is general IT controls apply to main, mini and end user environment. So both the statements were true. So option C is most appropriate answer. Dash are though also known as pervasive or indirect controls, general IT controls. See it here. General IT controls also known as pervasive controls and indirect controls. So option A is most appropriate answer. And we'll see fourth one, dash is a combination of process tools or techniques that are used to tap vast amounts of electronic data into meaningful information. That is data analytics. When these data analytics were used by auditor, they were known as computer-assisted audit techniques. So option C is most appropriate answer. Which of the following is not correct answer? Inquiry should always be used in combination with any audit testing method. Yes. Inquiry, what the auditor do? Inquire the employees or management or external third parties. In addition to that, we have to also obtain other audit evidences. So this is true. And reperformance is most effective but very time consuming. Yes, reperformance of any kind of controls or tests that management had already done is the most effective way, because auditor, he himself was gaining that audit evidence directly. So, but it was very time consuming. So it is true. Applying inquiry in combination with inspection. Inspection is like inspecting of any documents, etc., gives the least effective and least efficient audit evidence. You see, least effective is not getting the desired result, and least efficient is very time consuming in minimal time or minimal cost. You see, this is not true, because when we inspect all the minutes or when we inspect the title deeds and all, we get our desired level of output. So this is wrong. So option C is most appropriate answer. And now we'll see 22nd case scenario here. First question with regards to that. Which of the following statement is correct with respect to ABC Private Limited? Okay, we'll see here. ABC Miss C owns shares of 1,000 of the company and her brother owns shares of 50,000. The firm is having F, C and Mr. A as their partners. Okay, C should not own, right? C should not own any shares, but her brother could own up to 1 lakh. Since this firm is ineligible because he owns the shares, so not eligible as holding of brother. No, not for the brother, but for Mr. C. Option C is most appropriate answer. And okay, this is also with regards to firm's eligibility. Which of the following statement is correct with regards to XYZ? Okay, XYZ, A's father. A is also a partner, right? Yes, A is partner. A's father, that is a relative, owns up to 90,000, that is below 1 lakh he could owe. Mr. A owns the company in his personal capacity for 20,000. Yes, the partner could also owe not excess of 5 lakhs. Below 5 lakhs, so he is eligible. This firm is eligible for that company. So firm is eligible to be appointed as auditor. Option B is most appropriate answer. Which of the following statement is correct with respect to P Limited? What is P Limited is doing? Miss F, she's also a partner, right? Yes, partner. Has been advising the company for investment. She's involved in investment advising. So the firm is not eligible for that. Miss C indebted for 1 lakh. That's no problem here. If they could indebt for 5 lakhs, they could not guarantee for 1 lakh or more. So with regards to this, the firm is not eligible as Miss C's indebtedness, not for that, as involvement in advisory. Yes, option C is most appropriate answer. And with regards to the threshold limit, what they're talking about the face value. Option B is most appropriate answer. And with regards to shareholding of relative exceeds that 1 lakh, how many days the auditor has to take corrective action? Within 60 days. Yes, within 60 days have to take corrective action. All the time limits or the threshold limits that were given, monetary limits, right? This was discussed in a separate video. Please do check that out in our channel. And now we'll move on to 23rd case scenario. First question is, which of the following statement is correct? 100% checking will give absolute satisfaction to the auditor about correctness of transaction. We'll never get an absolute, we'll get reasonable, right? Even reasonable assurance and all. I think this isn't right. We'll just hold that. Sampling methods cannot be relied upon to reveal the true feature and characteristics of the population. The sampling, when they were done properly, like random sampling and statistical sampling and all, when you do that, it just the sample or sample size that you have got gives the characteristics of the whole population. So this is not right. This is a wrong answer. If drawn properly, a sample would be reasonable basis to an auditor to draw conclusions about the entire population. Yes, this is what we are talking about. This is correct answer. Option C is most appropriate answer. And second question is, Mr. C and D are discussing different approaches of sampling. What are they? Okay, they have been discussing sampling itself. Mr. C and D are thinking about checking sales transactions and accounts receivable on sampling, and they were discussing about two main approaches of sampling. And what they discuss after discussion, they have divided the sales into like value buckets, like segregated with regards to values and accounts receivable with regards to some numerical days. This is what mostly like statistical thing done with regards to number. Yes, they are discussing about statistical and non-statistical sampling. Option A is most appropriate answer. And third question is, which of the following method is used by auditor for drawing samples? Which of the used by the auditor? They have used stratified sampling. They have segregated into different kind of stratified segments which have same similar characteristics. So it is option D, stratified sampling. They have segregated into 1 lakh and so with regards to the days also. So option D, stratified sampling is correct option. So it is the initial perception of control risk as far as sales transactions are concerned. Okay, what they have thought. The primary discussion with regards to that auditing, Mr. C found that the number of transactions are high, okay, and the value of transactions also vary a great length, especially in case of sales transaction, and their base is very large. Number of sales transactions run into hundreds of invoices per month. You see, they have a very kind of complex type of invoices, right? They have been varying at a very high length, and the volume is also very high. So the risk also would be very high. So at the initial perception, they thought the control risk of sales transactions were high. Option A is most appropriate answer because of those volumes of transactions and the differences between the range and all for the sales transaction. To satisfy the above, genuineness of the balances of debtors outstanding more than 180 days. Okay, some debtors having outstanding balances more than 180 days. Okay, the auditor would have lower which risk when they were involved any kind of auditor with regards to risk. It is obviously detection risk. It is always detection risk. Inherent risk is with regards to the misstatements prior to do the audit. Control risk is with regards to the internal controls. When the auditor is unable to find the genuinity and all, that is detection risk. Option B is most appropriate answer. And now we'll move on to 24th case scenario here. 24th first question. Mr. Samuel needs to furnish his written consent and certificate to the company. We'll see who is Mr. Samuel. Mr. Samuel is statutory auditor, okay? Statutory auditor has to give his consent before appointment. Only after his consent, only then he could be appointed as an auditor. So option A is most appropriate answer. And second question is Mr. Samuel subsequently submitted his resignation, okay? He's required to intimate about his resignation too. We'll see whether the company is government company or not. No, they haven't given anything that with regards to that company is a government company, so he has to submit his resignation and intimate that to the company and the registrar. Option C is most appropriate answer. If it's a government company, he also have to submit or intimate to C&AG. And Samuel needs to file a statement in prescribed form with regards to resignation. He did resignation, right? Resignation ADT 3 and have to submit it within 30 days. We'll see with the provisions with regards to that. Regards to resignation, auditor shall file ADT 3 within 30 days. If it's other company, that's other than a government company, has to submit to company and registrar. And that's it. And fourth question is, option C is most appropriate answer here. If Mr. Samuel had been removed as auditor by the company under 145 by order of tribunal. Okay, tribunal had directed the company to remove the auditor. Then the cooling period for the auditor, they're asking about the cooling period is 5 years. Auditor cannot be appointed as auditor in that company or any other company for a period of 5 years. When do tribunal give that kind of direction is when auditor involved in fraud. So that's why a cooling period of 5 years. Option C is most appropriate answer. Fifth question is Mr. Samuel remuneration as auditor is fixed by. We'll see whether he's a first auditor or not. No, there was nothing with regards to as his first auditor, so the remuneration has to be decided by the company in general. Option B is most appropriate answer. And now we'll see 25th case scenario. First question, as per the provisions of relevant enactments, please advise who can be appointed as auditor for a nationalized bank. Who can appoint auditor for a nationalized bank? Board of directors can be appointed for the nationalized bank with prior approval of RBI. We'll see the provisions with regards to that. Yes, we require prior approval of RBI for appointment of auditor in a nationalized bank. It has to be done by board of directors. If it's a banking company, AGM could be in AGM we could appoint the auditor. And if it's SPI, with prior approval of central government, C&AG appoints. And for the RRBs, the concerned bank approves the appointment of the auditor with prior approval of central government. Nationalized bank board of directors appoint the auditor with prior approval of RBI. So yes, the correct answer here is who can appoint, not whose approval is required. So board of directors, option A is most appropriate answer. The matters which the banks require their auditors to deal with LFIR to be specified by. You see, these LFIRs have to be given to the RBI. So the RBI, where is RBI? Option D is the most appropriate answer. And RBI is the regulatory authority for the bank. The auditor should classify credit card accounts as NPA if dash amount due, whether it's total or minimum, it's minimum amount of due as mentioned in credit card statement, not fully paid within. See, you could, even if you don't know the answer between total and minimum, you could extract the answer from the same thing, like not fully paid. Some amount was not fully paid. That is a minimum amount that was not fully paid. Within how many days? Obviously 90 days. So option B is most appropriate answer. You see, this is why we call credit cards as slow poison, because though we could expand the amount in large, but it is so possible to continue the credit card balance even if we pay the minimum amount. So option B is the most appropriate answer. An agricultural advance is classified as NPA if interest and principal is overdue for how many days? Not for days, for in case of agricultural advances. There are some other kind of categories that we have to choose. If it's an agricultural advance, which is a long term, then for one crop. And if it is a short term, then it is two crops. Wait, we'll see the provisions with regard to that here. Second. Yes, here it is. Agricultural advances, if they were long term, it's regarded as NPA when any kind of principal or interest remains overdue for one crop. Long term, one crop season. Short term, for two crop seasons. So this is short term is for two crops, long term is for one crop. Option B is most appropriate answer. Fifth one. The bank is a consortium member. Consortium is where a group of banks together form to a group and advance a loan to an entity. Mostly they were given to like infra facilities or construction companies and all. Now this bank is a member of the consortium. And the cash credit facilities of 100 CR. They have given a CC account, CC loan, bank own share of 20 CR. And during the last 2 quarters, that is last 2 quarter is 19 to 2, that is 180 days, against a debit of 1.75 CR towards interest and credit were only 1.25, that is 0.5 deficit. That's outstanding for how many days? 180 days. So it's an NPA. Then the auditor had classified as performing. No, it's a non-performing asset. Option A is most appropriate answer. Now we'll see 26 case scenario here. First question is dash of policies and procedures that relate to many applications and support the effective functioning of application controls. This is the definition of general IT control. Option A is the most appropriate answer. As we have discussed this many times, that's why I'm not showing you the PDF here. And second question is, the objective of which of the following is to ensure that access to programs and data is authenticated and authorized to meet financial reporting objectives. That is, they have controls over accessing some programs and change or data changes, etc. So what kind of operation? It is access security. They're talking about access security. Option C is the most appropriate answer. They're ensuring that the access is authenticated and authorized. So access security. And tools and techniques that auditor used in applying principles of data analytics. You see, data analytics, when they were used by the auditors, they are known as CATs, computer assisted audit techniques. You have to know the full form of that. Don't get confused here. Option D is most appropriate answer. And dash is a term that is used to describe a very large computer with high computing power, memory, and storage that is required for running large business operations. Application is they're talking about computer. Application is a software that was used in computer, read access memory, no automated. No, mainframe. Yes, mainframe is the supercomputer that was used in large business. Mini frame was the personal computers that we often use in our home. Option D, mainframe is the most appropriate answer. Dash are need to support the functioning of dash, and both need to ensure some two things were need to ensure the complete and accurate information processing through IT systems. See, something option that contained internal controls we need not consider because it's related to automated environment. And those two controls which help IT systems to process correct information. So they were not IT dependent controls also. IT dependent controls, they use the outcomes or reports of the IT systems that were generated by IT systems. And those things do not support the IT systems and proper functioning of IT systems. So the remaining one is D, general IT controls, application control. General IT controls are needed to support the functioning of application controls and need to ensure the completeness, accurate information of processing through IT system. Makes sense. So option D is most appropriate answer. We'll see the answer for that. Yes, option D is right. 27th case scenario, 27th first one. The auditor shall express, the opinion when the auditor concludes that financial statements are prepared in all material aspects in accordance with AFRF. Okay, that's a clean report, right? Clean report is your unmodified opinion. Option C is the most appropriate answer. And second question is in relation to a grant of 50 lakhs. Okay, the company got 50 lakhs, received grant 50 lakhs under some scheme for acquiring machinery, and the grant received was credited to P&L account. You see, this is not a revenue grant, it's a capital grant with respect to specific capital grant with respect to machinery. They are putting in a revenue, right? So it's not a appropriate application for that. So they have overstated the grant in the credit. Yes, they have to qualify the report. Yes, option A is most appropriate. The auditor has to qualify the report stating that income has been overstated. Yes. The auditor shall express opinion when the auditor obtained sufficient and appropriate audit evidence. So not disclaimer of opinion. Disclaimer is given when he cannot obtain sufficient appropriate audit evidence. Okay. Concludes that misstatement individually in aggregate are both material and pervasive. If it's material or pervasive, qualified opinion. Material and pervasive, adverse opinion. Option B is most appropriate answer. And fourth one is assume Mr. Ram and Shyam from two different joint auditors and they have difference of opinion. What they could do, they could issue separate report and give reference to them. Then we're talking about what common point matter referred to senior joint. No, Ram and Shyam should issue separate audit reports. Option D is most appropriate answer. Fifth one, communicating key audit matters in audit report is not a substitute for disclosures. Yes, right. In financial statement that the applicable financial reporting framework requires management to make or that are otherwise necessary to achieve fair representation. This is what the definition of key audit matters is. So option A is most appropriate answer. Now we'll go with 28th case scenario. First question. Which among the following is not an element of firm system of quality control? See, they're talking about firm system of quality control, that is SQC1. And then they talk about the quality control in the engagement or audit of financial statement, that is SA220. There's a slight difference with regards to that. And ethical requirements, SQC1, acceptance and continuance of client relationship and specific engagement, that's also SQC1. Engagement review is with regards to the audit of financial statement, not in the office of the auditor. So C is the most appropriate answer. And monitoring is all the activities that were done by the team, that was also SQC1. When conducting audit of financial statements, which of the following is not fundamental principle of professional ethics? Professional skepticism. You see, professional behavior, professional competence, and due care were the fundamental principles of professional ethics, not professional skepticism. Option B is the most appropriate answer. Which of the following statement is incorrect in considering context of revision of audit terms, that is, revising the audit terms as per SA 210, indication that the entity has misunderstood, so they could revise the terms. Yes, that stands true. A significant change in ownership, yes, that's also true. Even when they change in ownership, they could change the terms of the engagement. Change in legal or regulatory requirements, yes. Change in audit team, no. When there's a change in audit team, you need not revise the audit terms in the engagement letter. So option D is most appropriate answer. The auditor has found that financial reporting framework is unacceptable. You see, the applicable financial reporting framework should be acceptable. When it is not acceptable, the auditor need not withdraw the engagement. This is also discussed in our standards when we are discussing the standards. So he need not withdraw, but he could emphasize, he need not qualify also. because that is what is applicable for the entity. He have to put the emphasis matter paragraph in order to bring the attention to the users of the financial statements. Option B, emphasis matter paragraph, is the appropriate answer. Option B. 28. Which among the following defines an audit program? Audit program contains what? The list of audit procedures that have to be performed. An audit program consists of a series of verification procedures, yes, to be applied to the financial statements and accounts of a given company for the purpose of obtaining sufficient evidence to enable the auditor to express an informed opinion on such statement. This is what the definition of audit program is. Option A is most appropriate answer. We'll see the answer. Yes, true. And now we'll go with 29th case scenario. First question, which among the following is not a fraud risk factor leading to fraud in an organization? Incentive or pressure to commit fraudulent financial reporting is a fraud risk factor. That means that incentive or pressure that was done by the management could create a fraud, could react a fraud, and perceived opportunity to commit fraud. Individuals being able to rationalize the act of committing fraud. These three were fraud risk factors. There was an opportunity there was incentive or pressure to commit fraud, and individuals, they themselves were committing the fraud. These three were fraud risk factors, and the undue advantage of inefficient internal control in the organization. This is also good, but we'll see the SA 240 why fraud is incentive pressure, perceived opportunity, individuals were able to rationalize committing a fraudulent act. Only A, B, C were given in the SA 240. So option D is most appropriate answer, which was not recognized as a fraud risk factor. And second one is what kind of fraud the auditor faced in issue 2. What's issue 2 here? The auditor finds that there is something unusual about balances outstanding in receivables, and the auditor has identified the pattern in the mismatches that he suspects that there might be misappropriation of cash, and detection of misappropriation is being prevented by crediting the amount received subsequently to the account of customer who paid earlier. That is, you see, this is what teaming and lading is. That is, the customer had paid on some date one, and they were misappropriated that, and the amount was put, or the amount was subsequently deposited or credited on day 29 or 30, like that, in order to avoid detection of that misappropriation of assets. That 30 days or 25 days misappropriation of assets could not be seen there. So here this is steaming and lading. Option A is most appropriate answer. In order to find what's steaming and lading, there's a video in our keyword kit. I didn't remember the number. Please do check that out. Keyword kit series. What among the following is incorrect in context of two types of fraud with regards to fraudulent financial reporting and misappropriation of assets? Okay, fraudulent financial reporting is achieved by manipulation, falsification, alteration of accounting records in financial statement. Yes, it was achieved through manipulation of accounting records, fraudulent financial reporting. Misappropriation assets achieved by intentional misapplication of accounting policy, principles, presentation and disclosure. No, misappropriation of assets is by misappropriating the assets, like using the assets for personal use, etc. And so this is incorrect. We'll see the other options. Fraudulent financial reporting is achieved by management override control. Yes. Misappropriation of assets is achieved by causing an entity to pay goods which not received. That's also a misappropriation of assets. So option B is incorrect, which is most appropriate answer. Issue 3. What is issue 3? On deeper scrutiny, the auditor finds the company is holding significant bank accounts and having branch operation in tax haven jurisdictions. Okay, they have operations in tax haven jurisdiction. Also, there's a significant related party transaction which do not appear to be ordinary course of business. That is not at arm's length price. What is that? What the fraud risk factor they're talking about? What are the three fraud risk factors that we are talking about? Incentives or pressure, opportunity, or individuals have a rationale to commit fraud. Here they have an opportunity in the tax havens, right? So where is that? Rationalization of fraud, no, creates an intensive pressure, no incentives or pressure. Fraud creates a perceived opportunity of tax havens. In results in misstatement of fraudulent financial reporting. Obviously, when it's done by management, it's fraudulent financial reporting. They influence the accounting records as a whole. Option C is most appropriate answer. Issue number 4. What is issue number 4? During the course of verification, it is found that the auditor, there is no proper hierarchy or approval for senior management expenditure. Okay. For the senior management expenditure, there's not proper approval. So what kind of fraud risk factor it is? It is the risk that rationalize of fraud. No, they create say incentive or pressure. Nobody is creating incentive or pressure. There's a perceived opportunity. Yes, there's a perceived opportunity as there is no proper authority for the senior management expenditure, result in fraudulent financial report. Not with regards to that, there were with regards to only one a particular segment of transactions, that is travel expenditure. I think is the travel reimbursement. So it's particular to an assertion. It's not with regards to financial reporting framework. Misappropriation of assets. Option D is most appropriate answer. And now we'll move on with 30th case scenario. First question is, as per CA Raman's discussion with other partners of the firm, their professional remuneration as per assignment allotted in the above case is fixed by. Okay, they're talking about the auditor's remuneration is fixed by which authority? We'll see the bank. Since it's a nationalized bank, the auditor's remuneration has to be fixed by RBI in consultation with central government. If it's a banking company, AGM shareholders should fix. Since nationalized bank or an SBI, RBI in consultation with central government fixes auditor's remuneration. So option B is the most appropriate answer. The engagement team discussion as held by CA Raman are a part of which of the following phases? Okay, what have been they discussing? That he tells that engagement team about various reports that would be required to issue after conclusion of the audit as statutory auditors, and during the course of the audit the team suspects. Okay, these all team discussions have been done prior to the audit, that is while planning the audit. So audit planning, that is option A, is most relevant answer. Which of the following types of audit report will have to issue to comply the requirements laid down by RBI circulars as narrated by Raman? You see, since they are auditing bank, LFIR. Option C is the most appropriate answer. In the given case, what should be CA auditor's legal obligation were reporting the fraud noticed. Okay, how much amount the fraud was. They involved a fraud of INR 2.5 crore, that is, it touched 1 crore, so they have to report it to central government. Yes, we'll see the option, report it in the audit report later. Central government, yes, central government, even non-receipt of any observation from board of directors. Option D is most appropriate answer. And the bank's major advance constitute a specific type of loan product. Okay. What, according to you, must have been the most common form of security creation in bank against such type of loans? Okay, we'll see what type of loans that they have more. They have, so 80% of bank branch advances are gold loans. Okay. For gold loans, what they put security? They put gold. For gold, what do we have to do? We have to pledge the gold. You see the difference between mortgage, pledge, and they were discussed in the keyword kit series. Do check that out. Pledge is transfer of possession, not ownership. So for gold, it is pledge. Option B is most appropriate answer.